Bandhan Bank came out with its pre-earnings release for Q2 of FY22, and there are some clearly improving metrics across the board. Overall collection efficiency for the bank for the quarter ended September has gone up and is at around 90%. This is in comparison to the June quarter, of course, when the bank was faced with the second wave. It was at around 80% basically in Q1 of FY22. However, this has still not breached the March level, which is Q4 of FY21, wherein the collection efficiency came in at around 96%. So still some way to go with regard to improving collection efficiency for the bank. Collection efficiency even within its MFI portfolio, which is the largest portfolio for the bank, came in at around 86% for the month of September of FY22. Now, this is still well below the 95% mark which it had clocked in March. So some improvements are obviously very visible. However, there is still some way to go to better that and to reach ideal levels. Moving on to how the loan book is looking. Loan book is at around 81,500 crores, 81,500 crores, up 1.6% quarter on quarter and 7% on a year on year basis. So a decent growth with regard to its loan book, especially after Q1 of FY22, which was quite poor for the bank. Moving on to how deposits have grown. Deposits grew 6% on a quarter-on-quarter basis, very healthy growth there, as well as 24% on a year-on-year basis. So the bank really pushing on this particular front and doing quite well in Q2 of FY22. Now let's take you through the trajectory of CASA, right? The CASA ratio stood at around 38% in September of 2020. It was at around 43% in June of 2021, a very good growth there as well, and that has continued as well into September of 2021. It's at around 44.5% in September of 2021, which is a 170 basis point improvement on a quarter-on-quarter basis. So overall, the numbers look quite strong or on the road to recovery, if I may call it. The stock, of course, has been buzzing as well. It's up around 17.5% over the last 5 trading sessions, up 5% only on Friday, and it's up 20% in the last 1 month of trade. However, the stock is still down 14.5% on a year-to-date basis. So still a long way to go for the stock to clock some decent returns for the current calendar year.